All right, big shout out to all my night owls rocking with me. Within this video, I'm going to be preparing you to trade the best setups at the best prices. We're going to be discussing upcoming day trading opportunities, and we're also going to be going over some upcoming midterm to leap option put opportunities. In terms of the portfolio today, it is up a little bit over 3%. I ended up playing the SIGA put options once it cracked under 15, sticking to the plan posted in my video watch list yesterday. So this video is going to be recapping that trade towards the end, teaching you that gap fill strategy. Right now, we're going to be going over the upcoming day trading opportunities that I'm seeing with the options, and I'm also going to be going over, which is on my top radar and where I'm putting a lot of size in right now, into the leap options, the midterm options, right? The passive income plays. So let's get right into it. So first things first, I haven't been talking about SPY that much lately because I just haven't been interested in trading it at these key critical levels. I've been much more focused on overbought stocks and put options because, we're on a macro bearish trend and I want to focus on stocks that are towards major resistance due for a pullback that correlate with my strategies. And in terms of right now, for the SPY, the main thing that I'm really waiting for is, you can see right here, you got this very strong support that cracked at 406, very strong support that cracked at 406, and then also the huge February 24th crash, very strong support at 411, right? So now that that's cracked massively and SPY bottomed out as of now in the 380s, what I'm patiently waiting for and hoping for is, in terms of, someone who is bearish for the macro, looking for a good entry for put options on SPY. I'm interested in these levels. There's a gap to fill at 411.34 and there's a gap to fill at 408.32. Those are the two levels that I am interested in buying some micro puts. So if SPY hits one of those gaps and it starts to form resistance, it starts to break down, it looks bearish, we get the bearish confirmations, a bearish reaction, I will look to scalp some put options at that key critical level. That's mainly what it is that I'm waiting for in terms of the SPY, right? So I'm going to be on the sidelines for a bit in terms of the SPY, but I see some phenomenal day trading opportunities coming up. And then of course the leap option opportunities, which is my current favorite situation in the market, as a lot of stocks are trading at some very weird prices at the moment, not correlating with the strategies. In terms of the SPY, I want you to pay attention to as well, in terms of support, $389.63, right? So some people are wondering, is this going to be a fake bull trap? Is this going to be a fake pump? Or is SPY actually going to be able to go back up to the previous support to then react as a resistance to continue the bearish macro trend, right? So your previous overall support levels, in terms of where it would need to head back to now react as a resistance, would be towards 411 to 408, right? So is it going to be a fake pump or not? This is one way how you can really determine that. This is going to be your key support level, 389.63. right? There's a gap to fill below at 389.63. I am interested in seeing how the SPY reacts at that level as well. So support wise at this level, resistance wise at the two gaps waiting to fill above, 408 and 411, right? So if the SPY can bottom and hold this level, 389.63, we are going to see another run and another attempt to break above 397. Now, if this just cracks through this 389.63, the puts are going to print. SPY will sell off hard once it does crack 389.63. Why is that? Why is it going to sell off hard, right? Because this is a key critical support level. You can see right here, you got very strong support right here. It gaps up, goes to 397. So basically from this 389 move, it is moving almost 10 points. That's big upside potential. And you could see today, it almost filled the gap. It almost bottomed out. And then it rocketed 8 points from the low of day. So with that being said, once we can crack 389.63 and turn this into a resistance level, once you see that occur, right? So you set these price alerts, you wait for these reactions to occur. When it looks bearish and starts breaking down, the SPY is going to sell off and the macro bearish trend is going to kick in terms of key breakdown wise. Because look at this, when you crack this support, this gap fill level, this gap fill level, this support, there's really no support all the way down until like 382. And plus the SPY has been rocketing 9 to 10 points from bottoming at this key support level. So if it cracks and reacts as a resistance, instead of rocketing 9 to 10 points, it's going to do the inverse. It's going to go down 9 to 10 points. And if you look at the chart, there's just not much support. There's not much support once we can crack 389s, there's not much support. We're looking at an overall next support level in the 383 to 382 range, right? And we're on a macro bearish trend. So those are the two key critical levels. In terms of support key breakdown, I'm looking at that for the SPY. In terms of, say it bottoms out, it holds, it looks strong, right? We're going to see a gap fill play, and then I'll look to play resistance, right? So the opportunities are the key breakdown play with a very tight stop loss, and the resistance with a little bit wider stop loss. Those are the two put option opportunities I'm seeing. In terms of the call side, I'm mainly on the sidelines for now. The reason why is I don't like betting against the macro trend. So the macro trend is like, where is the market? Where are stocks going to overall head within, maybe a couple days, within a couple weeks, right? The overall trend of the move, the big side of the move, and it's macro bearish. It is still macro bearish in that sense. Obviously, we're due for some sort of micro run, but if you just logically think about it, if you were to try to catch that micro run for the past couple months, you'd be getting absolutely crushed. Like, just focus on the trend. The trend is macro bearish. Don't bet against it, even if you're micro trading. Focus on doing what's best for your portfolio. Even if you're micro trading, you're just day trading, focus on putting your trades in situations where it's going to work in your favor for the macro. Because when that macro kicks in on those day trades, so like, for example, what's the macro kicking in on a day trade? The macro kicks in on a put day trade in terms of key breakdowns. When SPY cracks 389.63, the macro kicks in because that means it's a fake pump and it's going to sell off hard to 383, right? Put yourself in situations where the macro is in your favor. Don't bet against the macro, even if you're in the micro. There are certain opportunities in certain rare occasions where it's okay to do. It's just calls have been extremely tough in this market, and the money has been in the put options. There was 2 life-changing days. I believe the first one was on Wednesday and the second one was on Friday. In terms of put options, we're talking 10 to 20x plays. If you were to just be a little patient with them, the life-changing money is in the puts. Like, just focus on the trend. Don't try to catch a falling knife in terms of this market right now. We still have plenty of downside left for the macro for the longer term. Tesla, what's the deal with Tesla? So like I said, what I'm waiting for is, we cracked a major support level. We finally cracked through the February 24th lows, $700, right? And we bottomed at $633, and we put in some higher support today at $638, and now we hit $680. So with that being said, in terms of Tesla, this is a very strong stock. So you got to be buying puts at the best levels. So we cracked a major support level. Look at this. $700 is major support with big upside. Major support with big upside, right? So with that being said, what I'm doing is, now that it cracked and had its big downside move, I'm waiting for it to go back up. And then once it goes back up, if I see bearish reactions, towards $700 to $710, that's my current put zone for a scalp. I'm going to look to buy put options. So I'm waiting for $700. I'm waiting for $710, right? So when I see a stock have that massive break of support, I'll play the key breakdown, lock in profits like I did on Friday. And then what I'll do is I'll wait for it to go back up towards that previous support. If it doesn't, then I'll most likely avoid it, because I don't want to keep on chasing and then get stuck in a big micro squeeze, because strong stocks do tend to head back to their previous support levels, especially like such a strong level like this within time, right? And we're obviously due for some sort of micro spike. So I'm playing it safe. I'm waiting for $700 to $710. If we see resistance form in between these 2 red lines right here, I will be playing some put options. It's a nice key whole round number. If previous support can react as a resistance, we'll see a pullback from $700 to $710 to about $670 to $680. That's what I'm waiting for on Tesla. Now, those are the main day trading opportunities that I'm seeing right now. There might be new ones that come around. Okay, actually, we have one more. This is going to be the last one that I'm seeing. And of course, with the pre-market watch list, the pre-market scanner, the new gap ups, the new gap downs, there's going to be more. There's going to be new opportunities, more price alerts. Every single day we're sending these price alerts. We're waiting for these price alerts to trigger. They compound over time. Opportunities come to us. So Facebook's getting interesting. 52-week lows are at 169. There's a gap to fill at 174.95. So I got my price alert set for that. I want to see how Facebook reacts at that gap. If it starts to show signs of bullish confirmations, if we see signs of a reversal, it's consolidating, it's bouncing off the level, I will attempt to play a micro call. It's just like I said, within this market, calls are getting absolutely slaughtered. So I'm definitely putting my size with the puts, and I'm definitely taking the vast majority of my position on puts when it's time to trade puts. You can't just keep chasing these puts. So it bottomed out at 177.83, and it had a little reversal. So that's a good sign that we could see a gap close reversal when it goes back down to that level, right? So we got a nice sell off. I think it's down over like 6% during after hours, and we got this gap to fill below at 174.95, 175, right? So I'm waiting for the gap to fill. If it can react to support, I'll play a call, ride it back up to about 180 for a nice quick day trade. That's what I'm looking for on Facebook, waiting for a potential gap close reversal call opportunity on that. In terms of upcoming leap opportunities, right? And then we're going to be recapping my trade that led to my success in terms of today. Here's the deal. We got some good leap opportunities. We got some good midterm put option opportunities. Now is the time to be getting in on this one, HRB. And then we have two that are upcoming. I'm not getting in yet. I'm patiently waiting as they are at key critical support levels. I do think later this year they're going to crack. I'll be discussing some of the ideas I have for these, Planet Fitness and also Hasbro. But let's go over the main one right now. This is the main one. It is beginning to look like K-Stock. You guys remember that video I posted? This stock is about to crash. That was K-Stock. It got absolutely crushed. If you were to play the May 20th put option contracts on this day right here before close or right here at open, those would have 10x'd if you were to go with May 20th. It's just absolutely insane, man, on what you can do if you can predict a big move in your favor and you can time it right in a sense, right? And you don't even have to go far of the money. So, with that being said, I think I found the next K-Stock. I really do. I'm really confident in this play. I do have a decent position size in this. I'm definitely putting some size in on this one, and I'm trying my best to be patient because I am anticipating a big move to the downside within some time. I'm not saying it's going to happen right away, but how the chart is looking, it does look like it is going to be happening later into this week. Not that I need it to though, because I'm staying at the money in terms of my expiration, and I have plenty of time. I'm sized heavily in terms of, these two put options. I have the $33 strike, which is currently an at the money strike, right? $33 strike. I picked these up today at June 17th when this was green at $33.50 towards the highs. I bought these today, the $33.50 strike. I'm in at $1.30 on these. Right now they're at 140 to 155. You could see it's the highest volume option chain on this. We definitely hit this one with size. It has over 1,000 volume. And then these I've been in since last week, and I've been slowly scaling into these. The $33 strike at 190 to 205. I didn't get as good as an entry, plus theta decay, and it's been chopping around. So I'm basically at break even. My entry on these is at $2.05. I added at 185 today, lowering my average as well. So 190 to 205, I'm nearly at break even on those. Those are July 15th. Now here's the deal. If you're trying to play it super safe, buy some July 15th. I do believe, though, the June 17th, I think this is going to be more than enough time. I could see this stock starting to potentially crash. Not saying it's going to happen, but I can see this potentially crash. But the way things are looking right now, later into this week, towards the end of this week, right? So here's where I think we can potentially be it out. And like I said, it doesn't have to work in my favor for the short term. I have heavy size on July 15th as well. So with that being said, how are things looking right now? This is looking nearly identical to K-Stock in my opinion, and I've never seen such a bearish sentiment. I was looking at the bearish sentiment on a Webull. It's typically like 90 to 95% bullish on most stocks. HRB is the complete opposite. It's almost at 80% bearish and 20% bullish right now. It's very rare to find such a strong bearish sentiment on social media. Usually most people are just bullish and try to pump things to the moon. But there's a lot of realists involved with HRB, it looks like. And in terms of the option chains, all of the flow, all of the volume is coming in on the put side. Nobody's buying calls. Like literally nobody's bullish on this particular stock. And I could see why. It's looking like an exact replica of K-Stock. So this is what I like to do. I like to study history, see how it repeats. compare other charts, compare patterns, whatever can give me more confidence in my trade. And if we were to just visually compare the two, you can just see that the charts are nearly identical. And if you go back and watch that video, this stock is about to crash, you're really going to understand what it is I'm talking about in terms of education and this strategy. So if we go back throughout the long-term chart of K stock, let me just remove all these indicators. So anyways, if we go back to the long-term chart on K stock, you can visually see that there was a gap, and there was a gap waiting to fill above on K stock right around like 74. It was right here. There was a gap to fill at $74.70. Nearly at the all-time highs, big downside potential level, right? So it's that gap close reversal strategy where we're waiting for a stock to hit a key resistance level. We're waiting for a gap to fill above. Once it reacts to a resistance level, like it did right here, you have the bearish death candle. You have the red day after that. You have the lower highs, the wicks, all bearish confirmations. It sells off hard right here, rips back, and then it's just death, right? So we got all the bearish confirmations. And if we just look at the chart and how this is looking, they're nearly identical. So here's the deal with this HRB stock. HRB, the best level. So if it doesn't work out for me here, I'm going to hit it with more size at this level. So I'll cut my loss quickly, get back in towards this level, hit it with more size, right? I don't need a strong win rate to be successful within the markets the way my strategy and position sizing works, and I cut my loss quickly. So there's a gap to fill at $36.89. That's towards the all-time highs, big downside potential, right? In a very quick period of time, right? So that would be the best level to go with for the gap close reversal. But you could visually see right here, there is a gap to fill at 32.89. It has filled that gap. It did go a little bit higher. So this is like the second highest gap. Let me just double check this to see if this filled. Okay, so this one filled. You can see the strategy works phenomenal. Look at that. Have the gap close reversal, bearish candlestick, boom, rinse and repeat, man. So there's two gaps. There's a gap to fill in like the 32.80s, and there's a gap to fill towards the higher range, I think in the 36s, 37s, whatever I just said, right? So the point being is, this is the second highest gap. This is the second best level. The reason why I think it's going to work at the second best level is because I'm comparing this chart, right? I'm comparing this chart to K stock. It looks nearly identical. You have this pullback right here. You have this pullback right here. You have this massive gap and go move. You have this massive gap and go move. It hits towards those all-time highs. It hits towards those all-time highs, fills the gap, sells off, crunches, massive sell-off, right? And if you just look at this, like, if it continues to like look like K stock, it's basically saying that within a few days, we're gonna crack this support, 31.91. Once 31.91 cracks, it's gonna be a bloodbath, and that's when our put options truly print. Before then, we're looking at like 10 to 20% returns. But 10 to 30% returns if you get in towards the rips like I did today. I didn't wait for this to go red. I bought towards the rips where people were fearful and actually selling puts for loss. I told people to buy puts into the rips. It's going to be K stock all over again. I'm not getting faked out like I did with K stock last time and cutting my losses too soon. Like, these are midterm options. The short term is not expected to go in our favor. And even if it does, like, I don't give a shit if it goes in our favor because I'm playing for the big side of the move. I'm not playing for the small win. There are certain times where a big side of the move, a big win, can turn into a small win because you're getting strong confirmations that it's going to go against you. But then you might miss out on the big move because it can change, right? And then turning that macro trade into a micro trade can really screw with it. And it can really, get you in a situation where you miss out on the move. So it's not an exact science. But there are other ways where you can trade a macro situation, a micro situation. But the point I'm trying to make is, like, overall, it's going to fall off a cliff. We're heading to $30 and $30.30. That's where I see us heading right here. So when we crack 31.90, our target is going to be 30.50 to 30.30. We lock in some profits. Once it cracks that, then we're looking at 28.30s. Now, in terms of the June 17s, that's the most I would aim for, is like 28.50. But what I'm going to be doing is I will be taking off the vast majority of my profits when this hits 30.50. And the reason why is it looks identical to K. And again, you can just see, like, on this day, the puts went crazy. They printed like hard. But if you held and didn't take profits, you would have get back a very big win. But you can see if you kept holding, it would have been an even bigger win. But I don't want to be like that. What I want to do is I just want to lock in the vast majority of my profits here at 30.50. And then if it rips back up, I get back in with heavier size. That's what I'm going to do. So if I miss out on an even bigger move doing that, then so be it. I'm completely fine with that. It's just the way this stock works and the way how the chart looks. If this has a big sell-off to 30.50, we're most likely going to bounce quickly. And I want to get out before that occurs because my put options are likely going to be up 40 to 50% by then, right? So why not just lock in the profits, be happy with the decent win, and then if it rips back up, then get back in with heavier size. The reason why you get back in with heavier size, because it already had a big pullback, which is confirming your bearish beliefs, and it's at the same entry. And the contracts are going to be cheaper now because the expiration is, the expiration is coming closer, and you had the big squeeze up, right? So it's going to be an even better opportunity to buy puts again. That's how I'm going to play this, right? If you want and you have the Julys, you can take off like half here and then let the other half ride. But in terms of the June 17s, you got to be locking in the vast majority of profit at this 30.50s. And then we get back in if it rips back up to like 32.50, right around there to $33, right? So what are the entries? What are the best entries in this current situation? What are good prices to be buying puts? So into this week, above 33.30 to 33.70. Those are the levels. In between that zone, look for rips, look for resistance. That's where you buy the $33 strike puts. There's been so many opportunities, and I've been talking about this all week. My June 17s are up over 10% today. My other ones were at break even. They were up 20% here. Why didn't you lock in the profit? Because like I said, I'm just trying to get the big side of the move. I don't care about this micro channel. We're in a micro channel right now from $32 to $33.60, right? So the best thing you could do, play the puts towards resistance. If you want, you could lock in some profits on the dips. There's different ways to trade it. I don't want to trade it that way. You can trade it how you want to trade it. I just want to trade for that big side of the move. That's what I'm playing for. I'm not playing for this little micro win in and out, in and out. Eventually it's going to snap. You'll miss out on the big move. Like I'm not playing that, right? There's different ways to play it. You can play it how you want to play it. I don't want to miss out on this big side of the move. I'm playing for the bigger win in this situation. It's a midterm put option, right? If it happens to be one of those situations where, oh, I was up 20% and now I'm getting stopped out, it is what it is. Like it's this isn't an exact science, but it does look like in terms of the big move, it's favoring the bears because the chart is just so bearish and it's just so overbought and it's just sitting, it's chopping around. For the past 3 days, we've lost volume and it's just getting to a point where it just has to come back to earth. It just has to snap like K-Stock did. So in terms of the highs right here and the highs right here, how many days did it take K-Stock to really start to break down? It took 4 days after the highs. 1, 2, 3, 4. On the fifth day, it finally cracked. So 1, 2, 3, 4. And look at this bearish candlestick. So it could be as early as tomorrow. We don't know. But in terms of history and in terms of this pattern, it can be. I'm not saying it is. But what I want you to understand is history repeats itself in very similar cycles, right? And what I'm showing you, this works. It really does. And not that I need it to work here, because if I get stopped out, then guess what? I'm going heavier on puts at the $36.80, $37 all-time high gap fill, the best one, right? So you stick with me for the long term, you're going to see this stuff consistently works. And if this is a repeat of K, then we're looking at a crack of 32 tomorrow. It is definitely possible. Not saying it's going to happen tomorrow. What I am saying is if it's an exact repeat of K, then this is going to crack 32 tomorrow. So I'm loaded up on June 17th, $33 at the money strike puts. And then I'm also loaded up on the July 15th. If you have a smaller account, I would just go with the June 17th. If you have a larger account, I would go with both. So yeah, that's really gonna explain my play for HRB. We're gonna recap that trade here soon. I got some upcoming ideas on some leap options. These I'm patiently waiting to get in on. I'm in no rush to get in on these, but I want to bring some awareness to Planet Fitness because it's getting very interesting here. What I wanted to bring awareness on, and this is a very rare situation, it's like one of those no-brainer opportunities. I'm patiently waiting to get in. It's going to take some time for me to get in on this because we're at such strong support. I do think later into the year it's going to crack. So check this out. This is for a medium-sized account. You want to plant some seeds, just kind of hold it. This is the opportunity. November 18th, 179 days till the expiration. And then in terms of the strike price we're looking at is $82.50. These are deep in the money puts as the stock price has cracked 82.5 and it's currently at $67. So with that being said, this is just really due. If you were to get in now in the 18s, say you got filled on this at $18, your break even would be $64.50. Your break even on those would be $64.50, I think. The stock price is at $66.76. Your break even is at $64.50 if you were to get in right now. And like I said, I'm not getting in right now. I'm waiting. There was heavy volume on these, over 800 on Friday. There's a lot of volume, very unusual volume. Someone was buying heavy in the 20s. So anyways, the point I'm trying to make is you have 179 days. The stock price is almost at your break even. It's very rare to find a midterm option, to find a leap option where the stock price is currently at your break even, right? It's very rare to find. It really is. And these are deep in the money, so they're fairly safe. And all this stock has to do is go under 64.50 on the day of your expiration for you to break even. So in the meantime, if it goes lower than that, and we're not too far away from your break even, they're just gonna print like crazy. So the idea, the theory I have on these, at some point this year, I think Planet Fitness is going to snap. And what I want to bring some awareness to is this move right here, 88.50 all the way down to 25, rapid fire. So we went a little bit higher. So I don't think it's going to crash that big because we did hit new all-time highs. We're going to round it up to $100, so 12 points higher. But the point being is we have big downside potential left in terms of by the end of this year, by that November 18th. I really do believe we have big downside potential left. And we have some gaps to fill below. We have a gap to fill below in the 50s. We have a gap to fill below in the 40s. We have a gap to fill in the 30s. I could really see this selling off. I really can. I could really see by November, I'm thinking at least and this is being very modest, being very realistic, $55. So it's just a no-brainer situation. Our break even at the current contract price is at $64.50. I could see it dropping 10 points pretty easily before expiration. It's going to take some time. This is one of those ones where it's different. It's going to take time. I'm not saying it's going to happen right away. It could have a massive move up before seeing that massive downside move. It could do anything. But this looks very bearish. It really does. I'm on the sidelines. I'm waiting. You can see how the chart looks kind of similar to this. And then it has this big move up. And then it flash crashes. Hopefully we can get some sort of big move up on these. That is something I'm very interested in. I'm very interested in it. Like I said, it's very hard to find. I'm very interested on the 82.5 deeper in the money strike Novembers. What I'm waiting for is some kind of rip, man. If we can get something to 72 or even, oh my God, if we can get to $80, we form resistance there. I'll start buying those if that can happen, right? So that's kind of the game plan on that. HAS is kind of the same situation. I don't think it's going to be as good as K, but it's kind of a similar setup as well. And then in terms of the one for these, what I was looking at was, let's see if I go to Leap Options and I scroll down here. So what I'm currently looking at in these, and there was 30,000 in volume on two different strikes, very unusual volume. Somebody's going heavy on some leaps on October 21st. There was 15,000 volume, I believe, on the 77.5 strike and on another strike as well. I think both were towards out of the money. So I'm looking into those. I'm looking into those as well. The 77.5 strike. I'm looking into those, and the expiration on those is going to be on October 21st, right? In terms of full confidence, I'm a lot more confident that Planet Fitness is going to print, but I think Has will be all right too. By October, I could see this drop into about $70 a share. So if we can rip back up to ideally 92 to 94 on that, that's where I'd be interested. So I gave you the best levels in terms of where I'd be interested in buying. Still potentially interested in key breakdowns, but those are going to be tough. And those are going to be something where I scale into. So I enter, and if it has a big move against me, we get this micro bull rally, then I scale into when I'm down 50%. So in terms of my scaling strategy, I wait until I'm down big. right? So if I want to put $1,000 into leaps, I'll put in $500 at first, and then I'll put in the other half when I'm down big, right? I don't do what all these other people are doing where they do this little dollar averaging your cost down strategy. No, wait for like a 30-50% move against you. That's if you're scaling in. There's a difference between that and then just putting in your entire position size in the beginning. Then you have to get stopped out quickly because you don't want a bag hold, right? So like I said, with Planet Fitness and Has, in terms of the strategy I'll be using, when I feel it's time to get in, I'll be scaling in. I'll put in like 50% at first. I'll put in obviously a lot less if it's at a key breakdown. If it's at a major resistance level, I'll put in a lot more. So that's kind of how I scale in a sense. And those are just something I hold. Now, let's get into SIGA. So why did I decide? And there's so many people, oh my God, so many people saying, you know what? I'm gonna hold my lawns. This is gonna, if we break above $15, we're gonna see this blow off top to $20. I'm like, yeah, let's be realistic. This was at 25 cents in 2016. Really? Like you're going for an all-time high? I don't understand the interest in an all-time high breakout. There's no way of knowing of how high it can go, and history shows it ain't going that high above 15. Like let's be fucking realistic, guys. Like 15.21. Right here it gets too high at 15.21. It snaps off a cliff. It goes to 11s very, very quickly. You know, so I said in my video yesterday, if $15 cracks, I'm loading up on puts. I did that. I ended up making, a 7% return very quickly on those, and I went heavy, so I brought my portfolio up to 3.33%. Those trades were alerted real time, so I did leave some on to ride, made 17%. Those were up almost 35% at the peak. And the portfolio is up 3.21% on the day. Also, big shout out to students, man. They're absolutely crushing it. Lee, he went from like 5 figures to over 6 figures. He's going to be quitting his job within the next 1 to 2 weeks. Big shout out to him, man. I'm really looking forward to seeing his progression when he becomes a full-time trader on Tesla. I'm absolutely loving Tesla stock, man. I'm getting really interested in it, waiting for those key critical levels. I do genuinely believe Tesla is a highly predictable stock to be trading if you understand what it is that you're doing. Might not be the most ideal for small accounts as the contracts can be expensive, but there's always Thursday and Friday expirations in a week. But he's been killing it, just trading Tesla, man, every single day, absolutely killing it. Very nicely done, man. Very nicely done on SIGA, making a 19% return, $500 profit. Drums, absolutely killing it, man. Over a $13,000 profit in terms of today's return, in total $8,500. Very nicely done, over 20 times the cost of Trader Society. You guys are absolutely crushing it. So why did I buy the SIGA put options? This was alerted real time right here at 9:32 a.m. and then I exited 18 minutes later for 7% win. So why did I decide to do that? This is an overreaction. It's a very bearish move to the upside. And I was looking at the all-time highs. $15 showed that we could snap off into the 12s to 11s. So this stock recently had a massive move from the 6s all the way to 17.5. And I stuck to my plan within my watch list, as I stated in my video yesterday. If we crack 15s, you could see it had the strong support in the 15s. But you also had the strong resistance at 17.5, 17.5 double top, right? So if it cracks 15, it's going to be a fake out, and then we're going to fill the gap. There's a gap to fill below right here at $12.40, as you can visually see clearly if I disable extended hours. So yeah, I was playing for the gap fill play. As soon as $15 cracks, that's that all-time high support level that shows it can go to $12 to $11 from that crack of support. We got the double top in the pre-market, which was a bearish confirmation. And like I said, as soon as it cracks 15, I'm buying puts. So I bought the puts at the open as soon as we saw the lower highs form right here. And it got destroyed, man. This went all the way from 14s all the way down to $10.82. The puts really started to print if you were patient. I literally said in the chat, I know I'm going to end up selling too soon. I might as well just go back to sleep, wake up later, and sell my position. If I would have done that, my portfolio would be up 10% today instead of 3%. But I sold this way too soon. It was not an easy trade, man. The contracts were moving very, very strangely. They were crashing. It was crashing like crazy, and my puts weren't moving. They were even going down at one point. Implied volatility, and then that's small caps for you as well. But overall, if you were patient, they really did end up printing. But still, regardless, 3% return using the gap fill strategy. So basically just understanding that, we had this double top new all-time high in the pre-market. If it cracks 15s, it's going to be a fake out right here. It cracks 15s, which was the all-time high in the daily chart that showed we can go to $12 to $11 once we crack 15s for the fake out. And then this was a very good confirmation. Right here on the 5-minute chart, it tops at 1510, and then it cracks the support at 1404 towards the open. All bearish confirmations should be buying puts, as the daily chart showed. If $15 cracks, we're looking at a move to 1211, and we also had a gap that was waiting to fill below at $12.40. And if that gap fills and it cracks, where's it going to go? To the next support level at 11s, and the daily chart is also going to show you this as well. As you can visually see, it tops out at 1521 and it bottoms on the day in the low 11s. So it's all in the daily, it's all in the pre-market, and it was all on Friday's chart. Highly predictable gap fill strategy. We also have a gap to fill below right here in the 860s. I'm not going to be playing this one from here. The options are moving. I don't like the way the options move. But regardless, it was a phenomenal trade, guys. And that is the gap fill strategy within Trader Society. It teaches you step-by-step how to trade that strategy both ways, both long and short, calls and puts. So make sure you watch those lessons because there's several in there. So yeah, that's going to wrap up this video lesson. If you want to be a part of Trader Society, it's going to be the first link down below in the description. Read everything on the page, watch the short video. It's going to explain to you what is included within the program, guys. So yeah, just to give you some background, you get lifetime access, you get instant access, you get to watch me trade live at market open on live stream. You get to see my charts, see my portfolio, see my open and close positions, hear my live trading commentary. You get to watch me trade live. You get to watch me trade these recaps I'm sharing with you live in real time. Get your answers question live on spot as well. You do also get access to the community, the real-time trade alerts, the stock analysis. The real-time trade alerts include the short-term day trades, the swing trades, and of course the midterm to leap option trades. And you also get access to the written watch list and the updated stock analysis, the updated price action analysis. I'll answer your questions as well. You can add us as a friend on Discord. We have plenty of great people within the community, absolutely crushing it. We have a couple 6-figure traders. We have 2 millionaire traders, and we have 1 9-figure trader. With that being said, if you want to be a part of Trader Society, I would highly encourage you to join because like I said, guys, we are mainly focused on doing what's best for our portfolios right now and playing these put options at the key critical levels. If you study the stocks I'm buying on puts, people are asking me about all these other stocks. Like, oh, what do you think about SPY? What do you think about this? I'm like, I'm going with the ones that are towards their all-time high resistance levels while we're in a bear market. It's just such a no-brainer. Like SIGA, absolutely crushed. HRB about to get demolished, right? A lot of these other stocks aren't at their all-time highs. They're not at their gap close reversal levels. They're low. That's why you don't see me talking about them right now, because I'm focused on resistance, not the lows. Resistance, right? That's what's different for me. That's what's different. I focus on the best levels. You don't need a lot of plays. 1, 2 good plays a week. That's it, man. This is game-changing money. You compound this account. So if you want to be a part of Trader Society, man, and really learn how these gap trading strategies work that I've created, learn my trading system, you'll learn all the price action trading strategies within the video lesson library. You'll learn mindset, risk management, position sizing, psychology. There's so much more to trading just by, not just the strategies and price action. There's so much more to it. If you want to learn how this game works, if you want to learn my trading style, if you want to learn how to trade price action, right? If you want to become a self-sufficient trader where you can do this on your own, this is going to be the group for you. This is the program for you. So I'm looking forward to working with you. I will see you guys tomorrow live at Market Open with the pre-market watch list as well. And that's going to be wrapping up this phenomenal video lesson.